everyone. I want to welcome you to today's meeting, a 30-minute interactive session with Grace Ojo. I really appreciate you for joining me on this call. Yes, we started this meeting, this program on the 1st of September, and ever since we've been having it on a weekly basis between 5:30 and 6. And we'll be having various topics, and people have been contributing their quotas to the meeting, and it's been very interesting because that's the essence of the program, to bridge the knowledge gap within the insurance industry and to demystify the complexity in claims processing. So last week we discussed 5 steps to claim processing, and it was quite insightful and interactive. I know others will still join us, but in the absence, I have to continue because it's just 30-minute interactive session. My usual practice, I always ask questions. I think it's still you alone that is in the room, Mr. Azwinga. So I will ask you this question. I don't know whether do you belong to any club like Rotary Club or Lions Club? Do you belong to any club, sir? Can I have your response, Mr. Gwenga? Okay, you are still on the call. Okay, I would have loved to ask this question. I wish others have joined me. I would have asked this question. Sir, I'm asking a question. Would you like to answer my question, sir? Okay. If you do not belong to any club, can you just I want to hear your okay. Yowanda Deleke, you're welcome to this meeting.
Good evening, madam.
Good evening, welcome. Yes, I'm about to ask you my question. I've reflected on the last week topic. I've said that yes, last week we talked about 5 steps to insurance claim. The first thing, when loss occur, you call your intermediary, and from there your intermediary takes it up from there. Now I'm about to introduce today's topic, and my usual practice, I always like to ask questions, and I'm asking a question that do you belong to any club like Rotary Club or Lions Club? Do you belong to any club? And okay, if you do not belong to any club, let me ask this question. Do you know reason why people eager to Peter Debola, you are welcome, or Fanima, you're welcome. I'm asking a question. Do you have an idea why people join the likes of Rotary Club or Lions Club? I need the response in the room. I always like this program to be engaging, because that is the title of this program, is an interactive session. Please, I need someone to respond to my question. Please, let's mute our mic. Let's mute our mic. Okay, Peter Debola.
Okay, good evening, ma'am. I think the reason why so many people join all these club is because of networking. Okay. That is, they want to build their social capital through networking. That is, by getting in touch with some people that they can relate with, they can establish business relationship with, and also for the promotion of their goods and services. That's one. Then number 2 is also for social development. That is, people want to meet their social needs by relating with other people in the society. Basically, those are the core objectives of people going for clubs and all other social gatherings like that.
Okay. Thank you very much, Peter Debola. I really appreciate you for your response. On that note, we will go to today's topic. Today's topic is 5 benefits the insured enjoy from adequate insurance underwriting. 5 benefits the insured enjoy from adequate insurance underwriting. By now, we are all familiar with the word insured, and since the beginning of this program, I've been making use of the word insured, insurer, and all that. So we know by now that insureds are the customers, and the insurance underwriting is basically what goes on in the insurance industry. Underwriting is in insurance, is a process where risk to be insured is carefully examined and determined to determine the rate of premium and whether the risk will be accepted or not. That is basically what underwriting is in insurance. So the insured, they add some benefits. That's why I asked that question, that why do people join such clubs? Because they know that Mr. Peter said for social networking and for networking and interaction and all that, because they know that they have some benefits. People pay money to join those clubs, and it's not small money, because they know that there are some benefits they will enjoy from such clubs. That's why they join such clubs. Likewise, when people come to insurance, there are benefits you have. There are some benefits the insured enjoyed when they come to insurance. No, basically you have a risk you want to transfer to insurance, and you are looking at, they should be able to do it for me. So there are enormous benefits, but this evening we'll be discussing 5 out of those benefits. The 5 benefits will be highlighted for discussion this evening are equitable premium, adequate insurance cover, asset protection, commensurable claim, and peace of mind. So I want to start with the first one, which is equitable premium. We all understand, the common, the layman definition, or the common definition of insurance is that insurance is a pool of risk, and a pool of homogeneous risk. How do I mean by homogeneous? Like, maybe some of people that have cars, they want to insure it. That's the pool. You have your buildings, you want to insure it. So it's a pool. When you pool risk together, insurance is a pool of homogeneous exposure. So equitable premium. Everybody comes, everyone that is coming to insurance, you have something to contribute, and we call it premium. Premium is that amount of money you pay to get your risk covered. And how do I mean by equitable? Equitable means proportionate premium. The adequate premium to get you your cover. The equitable premium, the adequate underwriting will let you pay enough money, enough premium to get you cover. You will not be underpaid, and you will not be overpaid. That is what I mean by equitable premium. So one of the benefits insured enjoy in insurance underwriting is equitable premium. So when next you are coming to insurance, when your insurer gives you the rate,
I finish our assignment.
Please let's mute our mic. Please. Let's mute our mic so that we not disturb the meeting. Please. Akim, please, you're welcome to this meeting. Please mute your mic. Now, one of the benefits insured enjoy in adequate underwriting is equitable premium. That is appropriate premium that you are going to pay. When you have adequate underwriting, it will give you, you'll be able to, when you pay equitable premium, you will have adequate cover for your risk. So that is what we mean by equitable premium. That is appropriate premium. You will not be underpaid, and you will not be overcharged, you will not be undercharged. You are going to pay appropriate premium for the risk you are bringing to the pool. Then the next one is adequate cover. Just like I told us, anytime the insured pays equitable premium as its contribution to the risk is bringing to the common pool, the insured in return enjoy adequate cover. So when you pay adequate premium, when you pay equitable premium, you will enjoy adequate cover. That is, you will, because you are paid enough premium to get you covered. You are paid enough premium so that when the risk occurs, your claim will be settled, and you will enjoy, you will appreciate the purpose for which you have insured your risk. So when you pay equitable premium for your insurance underwriting, you will enjoy adequate cover. I hope we can all relate with that. Then let's move to the next one. The next one is, the third one is asset protection. Asset protection. How do I mean by asset protection? Let me paint a scenario for us. Imagine someone, maybe you purchase, you get your car, you buy your car with a loan. Let's say you went to bank to take a loan to get your car, and that car got stolen. If that car got stolen, bank will not, you can't go back to bank and say, because of your car has been stolen, so you will not continue to pay, you will not continue to refund the loan. You have to pay the loan. But if that car that you took loan from the bank to buy, if you have adequately insured the car, you get the insurance will restore that car back to you, even though, and I mean, you will not. So that is what I mean by asset protection. That even though that car is stolen, you will be restored. You get another car. So your purpose of not refunding your loan will not be in vain, because imagine if you do not insure that car and the car has been stolen, you will not go back to insurance to say, because your car has been stolen, so you will not pay you will not repay the loan. So you will still repay the loan. So that's one scenario of asset protection. So when you have adequate cover, adequate insurance underwriting on your assets, on your properties, you have asset protection. So when that property is damaged or is stolen, or something happens to your property, that is why the insurance is there for you. So it's an asset, it gives you asset protection. That is one of the benefits of adequate insurance underwriting. Then the next one is commensurable claim. When you pay equitable premium to get adequately covered, at claim stage, you will be commensurable settled. You will be settled accordingly. Now, let me give you another scenario. Let's say your insurer has told you to pay maybe 5% of your insurance premium, and you now negotiated it to maybe 2.5. What you are simply telling your insurer is that, my insurer, don't worry, let's share the risk together. So when claim occurs, your insurer will just give you a prorated claim, because you did not pay equitable premium for that risk. So you will not enjoy maximum claim. You will not enjoy maximum claim, because the claim will be prorated, because you do not pay equitable premium, and you were not adequately covered. So when next you are going into insurance, when next you want to do insurance, ensure you are adequately covered. I hope we can all relate with that. Because of our time, I will always give room for questions. So the last point on my list tonight is the peace of mind. This is very, very key. One of the it's fundamental. One of the key reasons why you go into insurance, and most especially why you need adequate cover on your risk, is the peace of mind. How do I mean by peace of mind? We all know that as human beings, we always have this fear of the unknown. That in case this thing happened, you just bought your new car and that thing just flashed you that what if this car is stolen? But if you know that that car is adequately covered, your mind will be set that even if anything happens to you, you have been covered. Insurance is there to restore you. You as a breadwinner of the house, I think, what of if death comes? If you have been adequately covered, you know that even if you are no longer there, your children, your beneficiaries, they will still enjoy a level of financial comfort. So it's a peace of mind. When you are adequately covered, adequate insurance underwriting gives you peace of mind that you will be restored. Remember when we were talking about benefits policy and indemnity policy? If it's indemnity policy you have chosen, you will be adequately restored to your original position you were enjoying immediately before the loss. And if it is benefit policy, maybe life insurance, your family will be comforted. They will enjoy the succor, even if the breadwinner is no longer there. Your mind will be at peace that even if I'm no longer there, my family will still go on. So the fifth point this evening is peace of mind. So as the breadwinner of the house, when you have been adequately covered, maybe for life insurance or even on your properties, if you are adequately covered, you have that peace of mind that at least I will be restored back to my original position I'm enjoying immediately before the loss. On that note, I want to give room for questions. You know, it's just 30 minutes interactive question with Grace Ojo, and I always want us to ask our questions. Please, it's question time. Let's ask our question. I want us to ask our question. I'm giving room for question now. Anybody raising hands for question? I can say, Site Abidoye, you are joining us for the first time. Okay, you and Adeleke, please unmute, and Abidoye, you're welcome. Okay, you and Adeleke.
Yeah, good evening, madam.
Good evening.
Good evening, everyone. Yeah, it's actually not a question. It's just amazing that I'm just getting to discover something about insurance. That's the one you called commensurable claim, meaning that people do bargain the premium.
Yes.
Okay. I'm hearing this for the very first time.
Okay, thank you. That's why this program has been set up. To bridge the knowledge gap in the industry. Thank you very much.
I'm hearing this for the first time. Okay. You're doing a good job, madam.
Thank you so much.
Well done.
Another question, please. Thank you so much. I really appreciate your contribution, you and Adeleke. Another question, please. I want us to be more interactive. No, it's an interactive. I want people to ask me a lot of questions so that we clear our doubts. We'll demystify every. Okay, Olurotimi Ogunwale, kindly unmute and ask your question.
Okay, good evening.
Good evening, sir. You're welcome.
Well done.
Thank you, sir. Thank you, sir.
All right. So I would just like to ask a question on the issue of commensurable claim as well as the premium.
Okay, sir.
Now, if I negotiate my premium from, say, well, on motor insurance, I should necessarily have a graduated premium from 10% downwards. Okay. Do all taking a scenario, giving cognizance to depreciation over time and all that. But if the premium I'm meant to enjoy in 5 years, I enjoy it now, and say my sum assured on a vehicle is 10 million, taking a typical scenario.
Okay.
And rather than pay 10% premium, well, let's take out SRCC and other excesses. I pay 10%. I pay 5%.
Okay.
Okay. So, and the sum assured is 10 million. In the event of a claim, what happens?
Okay.
Given this issue of commensurable claim.
Okay, thank you very much for that question, sir, Mr. Rotimi Ogunwale. Yes, you see, when I was talking about equitable premium, I made mention of that insurance is it's a pool of homogeneous exposure. Okay, now and also insurance thrives on law of large number. Insurance make profit through large number. How do I mean by that? You know, insurance works mostly on the mathematical tools we make use of in insurance is probability in case it happens and all that. So what happens is that over time, yes, just like you said, the original rate of car insurance is 10%. But because of the large pool that the insurance industry already have, it has been scaled down to 5%. And in some companies now that maybe they have a very large pool of car insurance pool and all that. In fact, some companies are even taking 4% or 3.5% now. What I mean by commensurable claims is that if your insurer has told you that, okay, now let's say in Nigeria now, most insurance companies, they take like 4% for car now. It's because of the large pool, there's a large pool enough to suffice that, okay, the equitable premium can now be like, okay, 4 or 5%. Now, if your insurer has told you that, okay, this car is 10 million, pay 4%. Your insurer has told you pay 4%. But if you now negotiate it down to like, no, let me pay 2%, that is when you will be given commensurable claim. That is when your claim will be prorated, because your insurer has told you that, okay, you will still have adequate cover on 4%, but you are now saying give me 2%. So at claim stage, you have not told the insurer that you want to share that risk with him. So at claim stage, you will be prorated. It means you are no longer getting full cover, you are getting prorated cover. You are not adequately covered. I hope I've been able to answer your question, sir.
Thank you very much.
Okay, sir. Sir? Hello, sir. Mr. Rotimi?
Yes, I responded. You've done well.
Thank you, sir. Do I have another person raising hand? Is interactive session? Okay, who is the person? Please unmute and speak. Somebody said is raising hand. I can't see hand raised, but please unmute and talk. Hello.
Hello, good evening. Good evening, everyone.
Good evening, madam.
Okay, well done. You're doing a good job.
Thank
madam.
you, ma'am.
Yeah, your explanation right now about if you argue or if you bargain the premium, then you get a prorated cover. You get a full cover.
Okay.
Well, that's good to know. So my point is, so why would I be encouraged? Why should anybody be encouraged to bargain it at all?
As business and government come together.
It's business. Insurance is business. Just like you open your shop and customer walks in and you tell a customer that this should cost 5,000 and the customer is saying you want to buy it for 3,500. If you can do it for, if you can part with 3,500, maybe if you can decide not to make any gain because you want to sell your market, you might say to sell it.
Now you now said I won't get a full cover once I have negotiated it.
Okay.
That is no point negotiating it now if I won't get a full cover when I need it.
Thank you very much, madam, for that question. That is why anytime you want to buy your insurance, please patronize your professionals in the industry, your brokers, your consultants. If you come to us in Bimbo Consultancy Services, we will tell you the implication of you negotiating down your premium. So when you meet the right professional, you will be well guided, madam.
Yes. I was just going to ask that. I hope we are told all these things at the point of buying an insurance.
Yes, you will be told. You'll be well guided, madam.
Okay.
Thank you so much. I really appreciate it for that question. Do I have another person? Please, what makes it interactive is the question my participants are asking. So I need one more question before we call it a day. It's just 30 minutes interactive session with Grace Ojo. Please, my contact is on the screen. Anytime when next you want to do your insurance, please call on reach out to us. Reach out to me at info@graceojoblog, or to us in my consultancy firm, info@Bimbo Consultancy Services, and you can also put a call to us. We will attend to you. Do we have another person? Do we have another one who wants to ask questions? I really appreciate everyone who has attended this meeting. Please, I look forward to having all of us next week. And I really appreciate everyone that Mr. Okay, Mr. Peter is raising hands. Please unmute and ask your question, sir.
Okay, my question is on this life product.
Okay, sir.
That some insurance companies, agents normally sell. Now, some of them will just come to you and say, okay, come and buy this product and all the rest. They tell you that they work for insurance company. And then they will tell you, pay your claim, pay your premium. Some will say pay every month, some will say pay every quarter. Now, the question is this, that when you pay your premium like that, and in case of if any of the risk crystallize or anything happen, and probably you have to pay a premium, the premium that they said you should be paying every month. To the best of my understanding, probably you're supposed to pay it annually, but they ask you to they prorate the premium for you to be paying quarterly. So if there is a claim, what you have not paid for, the premium that you're supposed to pay, which is supposed to be for a year, because they prorated it for you, you are paid to a certain number of months within that year. So what is going to happen if there is a case of getting your claim from the insurance company? Would they pay you? Would they give you your claim, or what is going to happen since you have not finished paying the premium for that year?
Okay, thank you, sir. I really appreciate for that question. Yes, when you are doing, okay, you made mention of that life insurance. It depends on the product you have opted for and the duration of the premium payments. If you have opted for monthly payments, once you do not default any month, mostly what happens in life insurance is in case of death. So if the assured that paid till the last month before the assured is no more, the full sum assured will be paid, because initially the assured has indicated that is to be paying monthly. It is not annually. If it is monthly, you are paying. It depends. It should have been stated when you are filling the form. So if you have opted for monthly payment, if claim crystallizes, once you are not owing premium, you will be fully compensated. Insurance is on a no premium, no cover. If you do not pay your premium, you do not have any cover. So once you have paid your premium as at when due and up to date, insurer is under obligation to fulfill their own part of the promise, which is to indemnify the claim. Have I been able to answer your question, sir?
Yes, you have. Thank you very much.
Okay, thank you very much. I really appreciate everyone that has participated in today's program. Our time is up. It's only 30 minutes interactive session with Grace Ojo. Actually, this meeting is being recorded. I upload it to YouTube. Please visit my YouTube when I share the link. Visit my YouTube and may subscribe to my YouTube. I really appreciate everyone. I look forward to seeing you again next week, same time next week. Thank you, everyone. You have a wonderful evening, stars and Mars. Thank you so much. I really appreciate you all.
Thank you.
Thank you, sir. Mr. Fondon Richard Joseph, thank you. Thank you. I can cite some people joining us for the first time. I really appreciate you. I appreciate everyone who is joining us for the first time. Please.
Thank you, Ma, for another wonderful session.
Thank you, sir.
Thank you very much, madam.
Mr. Rafiu, thank you. So always join us. Thank you so much. So next week is another time, 30 minutes interactive session with Grace Ojo between 5:30 and 6 p.m. Do have a wonderful evening. Thank you, everyone. I really appreciate you. Thank you, sirs, and thank you, man.
Thank you. Bye.
Yeah. Bye.